Hello all, I hope you're well in these extraordinary times, and I'd like to welcome you here to the Fintech Finance Virtual Arena. Now, in this special arena today, where I am hosting you, we will be looking at Lumio. And joining me today is actually none other than Charlie Richardson, the co-founder and CEO of Lumio. So, Charlie, can I ask, how are you doing today? And could I get a bit of an introduction, a bit of background to yourself and Lumio?
Sure thing. Yeah, no, I'm great. Coming at you from live in this bedroom / small office with my with my Cocker Spaniel puppy. So my background is in investment management and basically managing equity portfolios for high net worth and charities. Co-founded Lumio with Adrian and Tom just over 2 years ago now, in terms of going into full research and then sort of production. Products live in the App Store now, on about the sort of second, third version and iteration of that, with a big sort of pipeline ahead of new rollouts, and a really exciting time for us.
That's absolutely amazing. And what kind of started Lumio? What was the problem that you noticed? What really kind of catalyzed the whole process?
So, I mentioned my background is investment management, and I think that was actually one of the main sources of inspiration for Lumio, if I'm being totally honest, is sort of witnessing firsthand the inaccessibilities, or those sort of barriers to entry almost, of financial guidance or advice for so many young people. And at the same time, we had this emergence of more and more fintech innovation, especially on the back of open banking, where products were smarter, more convenient, and faster than before, but no one was actually optimizing money for the customer in their best interest. And that's sort of given rise to this basic billions of pounds of what we call lazy money. There is this convenience that's there with personal finance management, but there's a real absence of, so what now? And no one essentially is optimizing customers' money and helping them put it in the right place. And that's really why we created Lumio, is to make the most of money for millennials with the world's first personal finance optimization app. It's basically an independent app that utilizes the best of fintech products to help customers automatically grow their money in the right place at the right time. Simple as that, really. And this is all about acting in the customer's best interest with intelligent technology.
That's absolutely amazing to hear. As a millennial myself, that sounds like something that I've been sorely lacking my whole life. So when did you have that kind of aha, that light bulb moment when you realized actually you could action on this significant shortfall in the industry and kind of be best in class, first in class, and really offer up this service that typically millennials have been left behind with?
To be honest, I'm not sure there was like an aha moment, but certainly for a long time, I wanted to sort of scratch the itch, so to speak. And I had like years worth of pages, sketches, and notes before starting Lumio from just that personal experience. And I think when you experience something so firsthand and the issue repeats itself so regularly, you obviously just want to throw yourself into it. And I think you believe from the off that there is a market and a problem that you want to solve, but it is just an opinion and a hypothesis. So when you start undertaking that research, you start seeing how big the problem is, and you start speaking to people more and more, and you conduct that customer and problem validation, then you start to discover that there is so much value we can actually deliver to so many customers. So there's sort of like numerous points along the way where the light bulb went off and it just stirs and spurs that excitement. You do have challenging moments, but the belief to deliver a product that has the customer's best interest at heart seems to grow every day. And we certainly feel like we have the team to deliver that as well. So sorry to sort of slightly quash the aha moment thing, and I know that founders do have it, but for me it's been an iterative thing.
Exactly. But that's so much more of a kind of real life way of things actually happening. It's very rare for that just to be one moment. It's actually that kind of drip feed. You feel there's something going wrong, and then actually you realize you can solve it. So what is the difference between Lumio and kind of the when it comes to PFM compared to the old kind of typical spreadsheet where millennials should just be able to input all their finances and kind of work it out normally? What does Lumio different with that?
Yeah, and it's a really good point. And I suppose that spreadsheets, nothing wrong with spreadsheets at all. They're actually a suitable alternative to some PFMs, and maybe the first generation of PFMs that came out, to be honest with you. But I think a lot of the standard PFMs out there are almost entirely reactive to the customer input. And it's really that so what element that Lumio sort of is thriving upon is, over the next 12 to 18 months, we want to help customers automatically allocate their income and their savings into the most suitable products and the best performing products for them. But more than anything, it's not just driven by what's going to deliver the best returns or what's going to be most suitable for the customer. It's about diving a bit deeper and looking at that customer's lifestyle, looking at their values from an ethical standpoint, looking at their priorities, looking at their objectives in life, and really matching them with the right products, but at the right time and the right amounts over the course of a week or a month, depending obviously on their income and circumstances. So it's really that so what element, which, PFMs have done amazing things in terms of delivering convenience, but it's a case of now how can we actually accelerate customers' personal progression and personal finance progression towards realizing what's important to them in life.
Brilliant. So it kind of helps with a kind of cultural change within the person to actually start improving themselves. So can I ask, following on from that, more about financial literacy? Because you've kind of hinted that's something that might be currently missing with a lot of millennials. Certainly when I was at school, I certainly didn't learn anything when it comes to money management in terms of improving and in using different services beyond maybe a piggy bank. You don't learn how to get a mortgage, what is needed. So, I mean, do you at Lumio kind of, what do you do in the space when it comes to improving the financial literacy as well as providing that management tool?
Cool, yeah. So I think financial literacy is obviously something which is instilled into, let's focus on the UK, but the UK culture at a young age. And in terms of why it's so important, well, it's so important because high levels of financial literacy or improved levels of financial literacy have a huge impact on financial well-being of society. And I think that, without relating everything to coronavirus, but that's what's so troubling about something like coronavirus is, it's not just about, people don't talk about the economy because we're obsessed with the economy, it's because of what the impact it can have on society to delivering a peace of mind and a better life for people as well. And, with all that in mind, the financial world has become more complex to navigate than ever before. So I know in the UK, going back to financial literacy, I think we spoke about this in one of our first decks, is in the UK, only 22% of young people actually have a basic financial literacy to combat what is basically a financial jungle out there.
Wow.
And I know now they have actually, I think it was 2018, maybe 19, they introduced personal finance into the curriculum with concepts of tax, the importance of savings and financial calculations in certain maths classes and things. But we are such a long way behind Germany and Holland in particular as well when it comes to this financial literacy. And at Lumio, I think one of our major sort of inspirations has been that how well certain fintechs do that in those countries as well to sort of layer up that education and literacy.
Yeah.
And I sort of touched on this, but our focus is financial almost empowerment. So without going too widespread on this, look, we exist to accelerate financial independence, integrity, and personal progress. And we do this through, yes, intelligent technology that can expedite the decision making, but just as important is education to inform those better decisions as well. So we've done this pre-product in two ways. We launched Spotlight, which is a business and finance newsletter, which, from a company perspective, built a really vibrant community. And then subsequently, we launched Your Money, which is a personal finance and investing blog that is all about accelerating financial literacy for our customers, or just the public in general. And it helps customers make better decisions. It helps customers be more confident in making decisions, and helps alleviate financial paralysis, which is a consequence of financial literacy. Is that people don't take action and they don't get into good habits. And so it's been a real centerpiece to what we built in the early stages. It's probably the main reason that we started Lumio is that empowerment piece, and it can be done through technology and automation. But I think alongside that, the sort of equal pillar is that whole idea around education.
Yeah, I think that sounds absolutely brilliant, and it sounds so critical. It's certainly something I wish I had as a tool, maybe 10 years previous. But so yeah, that's absolutely brilliant. And following on from that and talking about investing, now with a lot of fintechs and a lot of digital, we can actually get fractional ownership. Why has this not been done before? You can now literally buy £2 worth of Amazon stock just on the fly, and these are brands that a lot of millennials are interested in, or at least know or have an affinity with. Yeah, why hasn't this been done before? And can you tell me about Lumio's side of this?
Yeah, so it's been a massive culture shift, I think, in the UK from stock ownership, and I think there's a lot of positives to that. There could be some consequences as well, unfortunately, but I think if we look at what shifted it, so free trade, Robinhood, obviously, and others have shifted the focus from purchasing a number of shares to the investment amount, which is more meaningful and more compatible when it comes to building a diversified portfolio. Not every share is trading like Berkshire Hathaway at $200,000 or whatever it is today, but there are a huge number of shares, particularly in the US, where they are way ahead of the game when it comes to fractional investing. But I think the reason they're ahead of the game is because it is culture related. So the problem of expensive shares I touched on over in the US is sort of endemic, and there are huge swathes of shares in the US markets that are priced in hundreds of dollars. But most platforms now over there, and Robinhood obviously sort of spearheads this, as well as being free commissions or no commissions. Most platforms are actually orientated to the private investor because of the culture over there. And so there are a number of broker platforms that are offering fractional shares, and they've taken care of the custody and the administration issues internally. And I think more than anything, it's like the local regulators are really enthusiastic about every Joe and Joan owning shares. In the UK, I think we've obviously seen Free Trade are launching their fractional ownership, but we hear a lot of grumblings, particularly from the incumbents, let's call them, the investment platforms, surrounding legalities, the principal trading, and dividend distribution. But also, I think it's the IT challenges that have sort of limited this up to today. And those are probably valid concerns, and most likely it's taken a new product without those IT legacies to actually democratize investing, as sort of Free Trade are aiming to do. And Robinhood, when they actually do eventually launch in the UK, I know they've postponed their launch. So from a Lumio perspective, it's about putting this on the radar for customers, because it is hugely important that customers understand the importance of investing based on the amount, not the number of shares. It's not relevant. And fractional ownership enables customers to do this. And we have to identify for our customers, where they're going to be able to best diversify a portfolio if that's what they're looking to do.
Brilliant. And would you actually provide them advice on that portfolio? Would you actually be able to steer them into brands, and your customers effectively just give you the kind of the steering wheel, and you can then take them through what they should look at, or do you give them more of a kind of top-down approach, say this is what you should be looking at, and let them make either the mistakes or ultimately what we hope to be successful investments?
Yeah, so right now, no, we don't provide sort of portfolio suggestions, or we're not an advice-driven company when it comes to those equities. One day, who knows? But our focus is on finding the right solution and the right provider for the customer based on their needs, and then helping them allocate a portion of their money, which is sat doing next to nothing, as long as it suits what their ambitions are. So we're not going to suggest a customer starts investing if they're looking to purchase a home in the next 18 months, because given the investment window, minimum 4 or 5 years is suitable for that sort of thing. So no, we don't make recommendations. What we do enjoy writing about and helping customers with is the education side of things. So we want to educate and inform customers on the solutions that might suit their needs, but then also give them the tools and the information that they need to go out and make good decisions when it comes to buying those shares. There are, Free Trade do a lot from an education perspective. but also you've got companies like Genuine Impact who are also doing some huge, brilliant things when it comes to equity, equity education and equity research. But no, we don't cover sort of equity advice at all.
One of the biggest wins that a millennial can have is effectively time. When it comes to acting on this lazy money, is the millennial market very different to potentially either Gen Z or even the previous generations before them?
A good question. So I actually have to be upfront with this. Is we talk about millennials, but all the work that we do as a company is actually focused on the situations and the circumstances of our customer rather than the demographic. Sure. Or their background. So it's all about really understanding the type of customer that we believe we're helping. So, where they are in their financial life, perhaps where they are, whether they're financially independent, whether they're in a position to start growing their money and taking certain risks. And it doesn't have to be investing. We help customers find the market-leading savings accounts, for example, and then allocating on a monthly basis their income. So focusing maybe just on the type of customers that, when it comes to time, is a really good point. And I think that's a big part of what we're helping customers do is through the automation piece is basically they don't have necessarily the time to go away and do a lot of the research, and we want to do a lot of the legwork for them, and then assisting them in the final segment of that decision-making process with the right information and the right education to help them make those decisions at this stage is what we want to do. So taking a lot of the legwork out of things is a big part of the solution that we're delivering.
So one of the largest issues for PFM is is the lack of a complete set, actually, banks being connected. So can I ask, what is your selection like, and how would how do you mitigate against firms that you can't connect with?
Yeah, that's something we obviously have to manage on an ongoing basis, but we, as a company, are entirely focused on delivering that full financial life to the customer. As a consequence, we have the broadest range of account connections in the market. So current savings, credit cards, investments, and pensions are all available for connection within Lumio. And so we work with, obviously, the customers and the providers to basically deliver on this. But a lot of that is customer-led and customer demand. So we're lucky that we have customers that are well engaged enough to request those connections. And we basically tally what is best trending and best demanded by our customers. That becomes a priority, and we then pursue that. And we pursue it with transparency with our customers and with the other providers that are out there. And obviously, those connections are API first, and just as secure as normal banking, banking access and banking security. And Free Trade and Trading 212 are really good examples of that. Two companies which have been massively requested on the platform, and I believe Free Trade are not too far away from opening up that connection themselves.
Oh, excellent. I mean, Free Trade seems to be a very relaxed way to learn about the stock market, because as we mentioned, you don't learn about it in school. As you actually buy shares as opposed to leveraging actual stocks. I mean, what's the thinking behind this, and where do you see the industry going as a result of this?
Yeah, it's sort of a big open question.
Big question.
Yeah, one that probably the regulators are probably monitoring quite a lot. But and I don't know, obviously, Free Trade's exact thinking, but certainly it reduces the risk to the customer and the strain on the customer's downside. And we mentioned fractional trading. And that's all about reducing the barriers to entry and enabling diversification. And there's loads of benefits that comes with it. But it's crucial that the regulator obviously does add the requirements on companies from an educational and an information standpoint. I don't mean to be a killjoy, but particularly when you start looking at the likes of eToro and other CFD providers that are out there, I think they should be very closely regulated. And I think Free Trade have probably chosen to just start with shares and fractional trading or fractional shares because of that. Because when it comes to retail investors, there are greater responsibilities. Customers have to understand the instrument or the assets they're actually trading, and obviously, probably most importantly, the actual downside to those instruments. I think Robinhood is a really good example of this, right? So they faced loads of scrutiny recently about the risks associated with those sophisticated financial tools like options, which is a controversial one, which they're offering to sort of everyday investors for the most part. And I think earlier this year, we obviously had a student which actually took his own life after sort of wrongly believing that he was in sort of down 750k or something along those lines from an options trade. I think that's a huge wake up for the industry and must be on Freetrade's radar in terms of the different instruments that they offer. What we want to achieve is obviously to create an environment of like well-assessed instruments, not a culture of sort of stock punting. And I think that's something that the recent surge since the pandemic in terms of retail investors, I know Robinhood obviously managed to have 2 enormous fundraisers on the back of it. It might have created that slightly, and it's something that I would be a little bit concerned by. But predominantly a US issue, but I think the UK regulators obviously are probably keeping a close eye on it as well.
Yeah, I can imagine. I mean, I didn't want to touch on it too much, but we do actually have to speak about that. And you did touch on it just then briefly. What have been the biggest changes you've noticed in this sector post-COVID? Have you seen the millennial generation actually finally take up the tools to action that?
Yeah, I think no doubt, like the fintech engagement from a B2C perspective has obviously ticked up. I think Forbes released a piece not too long ago saying 72% increase in engagement for B2C fintechs, and certainly we've experienced that sort of uptick in engagement as well.
Yeah.
More than anything, I think people are starting to realise the importance of saving, and in our case, trying to optimise the savings, whether it's a better savings account, better optimized credit card, or investing for the first time, but doing it in the right manner. There's been a big uptick in like I said, in engagement and customers taking more action now, because I think it's something that, maybe it's a bit more time on their hands, but more than anything, I think it's just how front page this issue has become, and just how much pressure so many young people have been put under when it comes to their personal finances as well.
And moving it back to Lumio towards the end, can I ask you, crystal ball time, where do you see Lumio going in the future?
Yeah, no, good question. I mean, look, every week there are new products and new services land in the market, and that adds to the need for a product like Lumio. This innovation is amazing, but the more nuanced products require greater eye eye for detail, I suppose, and that's where we come in. So creating like a new category of personal finance sees us create an incredibly valuable new layer for customers' lives, and especially one that is 100% independent and intelligent and basically acts in the customer's best interest. So it feels like the potential is enormous. And for us, I wouldn't put numbers on it, but like we're pursuing a world where people have financial security and peace of mind to basically decide what they want to do, and what they want to achieve with their money. And a world in which basically people's finances and personal finances are optimized just like a basic utility almost, regardless of the customer's background. So we see enormous opportunity, given that we're creating like a different layer in customers' lives that sits next to them and helps them make those smarter decisions. And for the time being, that's UK and then Ireland, and then who knows where else next. But that's certainly the optimism and the opportunity is really there for us.
Well, I wish you all the best. I believe that's actually all we have time for. So thank you so much for joining us today. I hope it was all right for you.
Yeah, no, pleasure. Yeah.
Excellent. Brilliant. Well, and also to all our viewers, thank you so much for watching. And you can catch the rest of the series and more over at www.fintechf.com and, of course, YouTube and LinkedIn. So I hope to see you next time and have a great one. See ya.